Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Tough economic news keeps coming, even during this lazy August vacation period in the Northern Hemisphere. First, in the US, factory orders were expected to retreat in June, consistent with the labour market and PMI signals, and they did. They were down 4.8% from May, although they're still up 6.6% from a year ago. The June falls are largely driven by a 22% plunge in transportation equipment orders. This same data confirmed the earlier durable goods order decrease in June of 9.4%. And we're awaiting important services PMIs for July, but they are expected to be much better than those for their factory sector. American economic uncertainty is now well embedded in consumer behaviour. Some brands are really suffering and causing large write-downs. Meanwhile, American vehicle sales actually rose in July to an annualised rate of 16.4 million, slightly more than expected, because they got a boost ahead of the expected price increases from the August 1 tariff taxes. But the boost was relatively minor, just 3.6% ahead of the same level in July 2024. In China, parts of the country are battling heavier than usual rainfall, and that includes Beijing itself, a city of 22 million. Dozens of people have died in flooding already. They are expecting 200 millimetres of rain to fall over the next 24 hours, on top of what they have already had, which created their emergency. Beijing's normal annual rainfall is 600 millimetres. In Australia, the Melbourne Institute's inflation gauge survey result brought an unwelcome surprise. It surged 0.9% in July, the steepest rise since December 2023, and a sharp rebound from June's modest 0.1% rise. The RBA is unlikely to be impressed because even if inflation is within range, it seems to be testing the upper end of that range, and a rate cut could well push it out of the range. Still, financial markets are still pricing in a full 25 basis point cut for Tuesday, August the 12th, when the RBA next meets, and they've priced in 2 more by the end of 2025. At this time, given the inflation is proving harder to lick, that seems unlikely. And in turn, there could be many disappointed market traders and mortgage holders as the year unfolds. The US Treasury 10-year yield is now at 4.19%, down 3 basis points from yesterday. And the price of gold will start today at $3,372 an ounce, up $10 from yesterday. And American oil prices have slipped back again, down $1 to just under $66.50 a barrel, while the international Brent price is just over $68.50 a barrel. And the Kiwi dollar is now at 59 US cents, down 20 basis points from yesterday. Against the Aussie, we're down 10 basis points at 91.4 Australian cents. Against the euro, we're also down 10 basis points at 51 euro cents. That all means our trade-weighted index starts today at just on 67 and down 10 basis points as well. And the Bitcoin price starts today at $115,217 and up 0.9% from yesterday. Volatility over the past 24 hours has been low again at just under plus or minus 0.7%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.